The Federal Reserve hit pause on Wednesday, largely as anticipated, by leaving its policy rate unchanged after 10 consecutive hikes. While the Fed's Federal Open Market Committee had little new to say in its policy statement, the committee's so-called dot plot, that takes the pulse of policymakers' rate outlook, was more hawkish than anticipated. The dot plot showed that the majority sees 2 more rate hikes as appropriate for the remainder of the year. Even with concerns over the cooling U.S. economy, we think investors should take note that the Fed still is keenly focused on getting inflation under control. Let's take a closer look. The dot plot's message was clear. Only 2 of the 18 committee participants saw the June decision as the end of this tightening cycle. Even more telling, and this came as a bit of a surprise to us, a full 2/3 of the committee thought that at least 2 more hikes would be appropriate this year. In his press conference following the meeting, Fed Chair Jay Powell didn't push back on the hawkishness of the dot plot. Instead, he reiterated, as he often does, that the dots are not a decision or a plan of the committee. While we agree with Powell on this point, we do see value in the dot plot as a general indication of the sentiment in the committee. And in this case, the overwhelming sentiment among policymakers was that the committee is not done raising rates. Powell's press briefing sounded much more like an explanation of the dots than the usual discussion of the committee's written policy statement, which offered little new information. He characterized the June pause as part of the process of slowing the pace of rate hikes as one approaches their peak rate. But he added that inflation risks remain tilted to the upside and that the widely watched non-housing core services inflation component was showing only early signs of moderation. Further, Powell said that the very tight labor market needs to loosen up to bring inflation down decisively. The committee has not made up its mind on what it will do at its July meeting, Powell noted, but we think he clearly pointed to what will drive that decision. He said the committee wants to see inflation, especially core inflation, fall decisively and the labor market cool off. In his opening remarks, he reiterated that the committee remains squarely focused on inflation. We think investors keen on devising the future direction of monetary policy should be too.